Welcome back, everybody, to another edition of the Finance Year. Today, we're going to talk about SPACs, what's going on in the market. There's been a lot of shakeup in the last few weeks. It's very exciting to see what's happening in the industry today, what's happening in just the capital markets. We'll talk about taxes. We'll talk about a couple of new SPACs. We'll talk about what's happened to the current SPACs and why they peaked in the first quarter. If you've got questions, comments, the first time tuning in, you can always comment on the side below, wherever you're on, Twitter, LinkedIn, YouTube. Let me know your thoughts. If you've either invested, researched, or thought about selling or buying into or issuing a SPAC. I love to hear your thoughts. It's a very new, hot market. There's so much going on in the industry today that it's hard to just pretend that what's going on in single issuance. This morning, I learned that of all the issuance today, there are only about 5 people that are SPAC sponsors that have actually invested in their SPACs. So most of the people that are in the SPACs, pipes, or doing some type of private deal are not actually, they don't have skin in the game. So they're just not invested in the business. They're kind of hoping that first that some deal will get done so they can monetize, go public. And then 2, they could just see the equity upside with the warrants. And the warrants is where the biggest problem is happening today. It's happening because of the SEC has put down some more regulations for the accounting standards on warrants, on the equities, whether it's considered an asset or a liability. That will determine where it sits on the balance sheet. And it's a big question. It's an important question. So first up, Goldman Sachs released a chart. You can find this anywhere online, that in 2020, we saw more SPACs than we ever seen before. It was a record number of SPACs issued in the capital markets. But in the first 2 months, I had posted this many times on thetechfinancier.com and on previous newsletters, that in the first 2 months and now wrapping up into March, the first quarter of 2021, we had more SPACs issued than all of 2020. And 2020 was a break record year from past years combined. So it's pretty amazing to see this. It's on the upwards of about 80, I think it's $80 billion. It says $93 billion here. And about $80 billion was raised in 2020. So there are a lot of people that have just gone out, literally invested and issued blank check companies with the idea that they'll close a deal in the next 18 to 24 months. They can extend it, I think, to 36 months. But the reality is 2 things. First, the market is pretty hot, so you're not going to find a good deal at a good price. And then 2, there's so many people chasing the same exact deals that the likelihood of all of them closing is very close to zero. And the only people that will actually close a deal are high-quality sponsors. So that's pretty important to realize. I think I saw one high-quality deal that was getting done in the last week or 2 with Mudrick Capital and Topps merger. That Topps is a sports baseball cards company. They sell all these like memorabilia and products related to like cards. They also sell a lot of things in the candy space. So they target the sports customer really well. I think that's an interesting deal given how hot the sports arena has been, online esports, and then baseball cards have been pretty hot for the past few months. So it's pretty cool to see this. But SPACs, we could see this graph is just going downhill, not promising. If you're in the SPACs industry, the issuance is going to be zero. I think the SEC has really pushed the brakes because a lot of sponsorships in the past few months have been celebrity raised. So they're sponsored by people that are just not qualified, but they're taking a seat on the board because they're getting offered equity just to have their name on the SPACs, say, hey, this is what I'm doing. This is the deal. If you want to do a deal with us, like A-Rod, Serena Williams, a lot of people are just getting a free ride, I should say, on doing a SPAC. So if you've seen names that are interesting to you, I'd love to hear about them. If you've invested in anything, let me know. There's so much going on in this space. So let's talk about a few interesting ones that have come to market in the past week or so. Actually, before I get into that, about the Wall Street Bets group on Reddit is now about almost 10 million users. It went from about 2 million in January to 10 million in the last 3 months. It was about 1 million last year. It was not a very popular group. In fact, there are quite a few investment groups. There's investing, there's SPACs, there's a variety of stock groups that are on Reddit. They're very popular forums. They replaced message boards from the 90s and 2000s. The SPAC group on Reddit has been one of the fastest growing groups in 2020. These guys are bright, smart. They do hard research on this industry, and they say these are the sponsors, these are the companies, these are the targets. And they've done such a good job of laying it out. I recommend checking it out. I have a link on the techfinancier.com and in the newsletter, but you can go into Reddit and look up SPACs. I'll just name a couple of them that I see here. There's Triller, there's Aries, BuzzFeed, Bird Scooter, Shutterfly, let's see, Saunders. A lot of these guys are in talks, have talks, speculative. These guys on Reddit have literally lined up who, what, and where the deal may take place, the stage, what's ruled out, what's speculative, Stripe, Bloomberg, Subway, Klarna, Kraken, Robinhood. A lot of these companies, they're either ruled out, they're in talks. These guys have mapped everything. These have mapped all the deals in such a good fashion that it's equivalent to what a hedge fund analyst would do at the desk. But these guys on Reddit are crowdsourcing all of the deals, which is amazing. So that's something I wanted you guys to take away with, because you can learn a lot from that Reddit subgroup. The biggest SPAC that's in discussion right now, it's actually current in process, is a WeWork merger with the BowX SPAC acquisition group. BowX acquisition is run by Vivek Randeviv. He's the founder of Tibco. He's also the owner of the Sacramento Kings, and he's very familiar with running public companies. He's not a real estate leasing guy, but he's done a pretty good job running multi-billion-dollar businesses. And then Sandeep is CEO of WeWork. And you guys kind of know the situation of WeWork. It's been in a really tough position in the last 2 years since its IPO failed in 2019. But now the company has reduced its valuation from $47 billion to $2.9 billion. It's cash rich. I think $11 billion was invested in the company. It probably has $5-6 billion on the balance sheet. It will raise another couple hundred, maybe a couple $1 billion from the SPAC, go public, and it's really well positioned to take advantage of the remote work environment that's going to come about in the next 6 to 18 months. I can't imagine anybody else competing with these guys head on. So it's pretty impressive to see this. WeWork already mentioned that they've cut their staff by 60%. So the workforce is down. Their occupancy is down to 47% from the 72. But that's not a surprise, given that companies like JP Morgan and everyone else have been reducing their footprint in New York City and other metro areas. So let's see what WeWork. I think they'll come out in the next few months. I think it's a really big deal. And this is probably one of the last major SPACs to come to market. I recommend checking it out. I think there's going to be a lot more to come into the market. Hey, Brindley, what's going on? What are your thoughts on SPACs? If you've seen anything, give me some feedback, any commentary. I'd love to hear what's on your mind. So I think WeWork is going to do really well. I think there are a couple more that are probably in the pipeline. If they don't close in the next, let's say, 8 to 10 months, then there's a reality that those deals, the capital will just be given back to investors, and then no deals will be made. So that's the current situation with that. I just wanted to give a quick rundown on SPACs. I also included a couple additional things in the newsletter to talk about what's gone on with IBM, Xerox, the earnings calls this week. Definitely recommend checking it out. If you're on LinkedIn, YouTube, or Twitter, let me know. I'm doing a lot more questions on YouTube that are just streaming in. They get published every single day. And I'll be posting a lot more content, providing commentary on technology and investing. So if you have comments, concerns, whatever your thoughts are on the markets, I will actually provide one more piece of advice regarding the Biden capital tax rule. Let me answer Raj's question. So Raj, yeah, they're not, SEC has done a pretty good job. So the SEC is a regulatory body in the capital markets that provide pretty good breakers in the case that there's too much of speculative run, or a lot of people are just just saying, hey, they're all chasing the same thing without any justification. So the problem was that there were two problems happening. One, there were a lot of celebrity sponsors that were coming in and saying, hey, we're doing SPACs. They had no credibility as investors. They're not business people. They had no background. There's so many people like that that are swaying investors. The SEC wants to create some ground rules so people don't simply write their hard-earned money into blank check companies. And then the secondary problem is SPACs have an interesting financial instrument that provides warrants, which is a free option, a long-term option for investors. And usually the sponsor and some of the investors get a piece of the warrant. So, if you buy a $10 SPAC, the warrant could have exercise price at $15, $18, $25 a share. So if you buy a company worth $3 billion and the warrants get exercised, it might be worth a lot of money. SEC is worried about some of the accounting reports, the financial statements that are being disclosed by SPACs, and they feel like it's not transparent enough. So they really press the brakes on the regulations. They want to enforce better registration by the securities. And really, at the end of the day, they're protecting the consumers that are chasing these companies that are not worth anything. I think the peak in my mind was Nikola Motors last year. Was one of the major SPACs, and I think the September timeframe. The company has zero revenue. It went public, was worth like $11 billion. They still don't have a product out in the market, and it's a pretty crazy run. And then the CEO quit. There were a lot of cases of fraud. Short seller exposed a lot of the problems. So there's justification of why they should be wary. And the SPAC market provides a shortcut to going public, right? They're not, the level of due diligence is not as rigorous as an IPO and going public. There's no road shows, there's no investor, there's one sponsor, usually a group of institutional investors. So the level of rigor isn't there. And the SEC is saying we got to figure out a better way to do this so that the quality of SPACs that come to market, they're not just doing it because they can, they're doing it because they can close a deal. So that's very important as an investor to know. The last thing I'll mention that I want to talk about was the capital gains tax. This is the issue that's been brought up in the last 2 days, something I've been working on for the past few days. Biden has mentioned that he's proposing the capital gains to go from 20% to 38, 39%. That's a big jump. This jump has not happened since, I think, 1969 or who was a president during that period. Between Reagan and Clinton, we've had a pretty consistent capital gains tax and the 20 plus percent, the 20, 30% bracket. And it's been diverged from the income tax bracket. The income tax bracket is it's progressive in the sense that it increases every time you make more money. And, if you make a lot of money, you actually want to be in the higher tax bracket, but it's marginal. So it increases by a point every time you go up a branch. With capital gains, it's been lower than the income tax bracket for many decades. It's worked. There's been a lot of investment that's happened from 70s, 80s, 90s, 2000s, and now. So a lower capital gains tax incentivizes people to take their dollars, reinvest it, and then hold it for a very long period of time. Because if you have a short-term holding period, your capital gains tax is quite high. It's equivalent to ordinary income. If you invest and hold for over a year, then your capital gains tax is dropped, right? Before Trump, I think it was around 28%. Trump reduced it for very good reasons because he wants to be competitive. And Clinton actually had reduced it first, down below 30%, I believe, when he was in his 8-year term in the 90s. So this has been both bipartisan and it's worked very well. It incentivizes investments from private investors across the board, especially in the middle income bracket. And the problem now is that Biden wants to increase the taxes to 38, 39%. It will reduce the incentive to invest, specifically for middle America that usually has a marginal investment account. So they're talking about, hey, if I'm investing in Goldman Sachs, JP Morgan, and then I'm going to make 645 angel investments, why would I make so many angel investments if my tax bracket is so high? I'm not incentivized to hold for a long term and I don't get liquidity. So, Brindley, I'll get to your question in a second. I just saw it. So there's that disparity that, if you're making over X millions of dollars, you don't want to invest as much. And remember, they haven't distinguished between corporate and personal yet. So by increasing the tax basis and making it very, very high, and I don't know if it'll be a very high approval. I think he'll get away with a 32, 35% still. It'll be very expensive to come make an investment. Your reinvestment risk is very high because your return drops. I make an investment today expecting I'm going to make a 10% IRR over 6 years. Now at a 40% tax bracket, if you live in California or New York, your tax bracket is going to be over 50%. Your IRR just dropped to 5%. Your investment decision-making skills have reduced in the sense that you're not going to make the same decision going forward anymore. You're going to change that decision. You may actually live in a state or country that has a lower tax bracket so you can make higher investment decisions over the long period of time. Thanks, Brinley. So, cool that you're from South Africa. That's awesome. I was just looking it up yesterday. I got family and cousins down there. I think Biden's policy is pretty concerning. I think they just want to increase the taxes to pay for the infrastructure plans. They actually don't have any plan. They haven't talked about how they're going to pay for other infrastructure and other packages they've included in their current bill. So the problem today is that their monetary and fiscal policies, when it comes to money, it will be capped. If they increase it to 38, 39%, you really can't increase it anymore because it becomes a disincentive to work and invest. So it's a pretty big concern. I think a lot of people are going to fight it back, but I'm pretty sure the capital gains tax is going to break 30% from the low 20, 21% it is today. And that will just reduce the ability to invest or the willingness to invest, which is probably the right way to say it. So there's a lot of things that are happening here. I think it's something you need to keep an eye on. There are a lot of people that want to talk about moving to Florida, the Caribbean, Texas, any of the low-income states and and territories. The reason is genuine. You're going to save a lot on income tax and capital gains and a lot of other areas that you can save money on. You can't combat that. That's the reality of raising taxes. It doesn't make anything equal. It makes it actually more difficult to invest. And the reality is I would rather see people and businesses, whether rich or poor, and make investment decisions than the government, because the government does a very poor job of delivering a positive return on investment. So every dollar invested might be 40 cents towards an idea as opposed to 100 cents to an idea if an venture capitalist or a local person invests in their community. So this is an evolving discussion. It's only a proposal. There's a lot more to be released here. If you read anything, let me know. Comment, message me, email me, whatever you got. I'd love to talk about it. I think it's a very important decision, irrespective of what your thoughts and ideas are. It impacts everybody across the country equally, and there's a lot more going on in the world. So that wraps it up for the Financier today. Working on different formats. I love to hear your feedback. If you haven't already, check out the Financier at thetechfinancier.com. Sign up for an email and for the newsletter. Let me know. Follow me on Twitter, LinkedIn, Quora, any of these social channels, and let me know what your thoughts are on economics, capital, labor, and technology. We talk about it all on the Financier every week. Check it out today. And thank you, everybody, for tuning in today. Take care.